Get Rich Education is brought to you by Norada Real Estate Investments and Mid-South Homebuyers.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education, episode 65. I'm your host, Keith Weinhold, and I'm back to help you think about investing in ways you've never thought of before and improve your wealth. Thanks for being here. I appreciate you. 4 episodes ago, I did an entire show on how your stock market returns are zero. To get a real return, you often need to directly invest in something real. Successful real estate investing often comes down to property management, so just consider this. When renting a single-family home, you can typically get a better quality of tenant than you can with a multifamily apartment building. Therefore, you can make the case that single-family home tenants are easier to manage from that perspective. When you rent out an apartment building, it's often more difficult to find a good tenant because arguably a smaller pool of renters will want to accept those less private living conditions. Well, in an apartment with a lower quality of tenant, it just takes one loud, disruptive tenant or just one tenant engaged in illegal activity or drug activity in your building to spook the neighboring tenants into wanting to move the heck out, okay, because everyone lives relatively close together. All right, say you can hear that loud noise or whatever through the walls, okay? One unit's bad dog alienates every unit in the building potentially, okay? Well, with single-family homes, you don't have that problem. One loud tenant, they might not even be noticed by others because the residents are spaced far apart, okay? One problem single-family home tenant, they're probably just not going to alienate any of your other renters, okay? Plus, the single-family home that is next to your single-family rental, that's probably not even owned by you. So, yeah, it's bad that that neighbor is irritated by your problem tenant, but that neighboring home, it's probably not your tenant, okay? It's going to be somebody else. All right, so you're telling me that in apartments, it's harder to get good tenants, and yet at the same time, it only takes one bad apartment tenant to mess up the lives of many residents in one building? Yes, that's what I'm telling you. And that's one advantage of single-family home investing over multifamily apartment building investing. Different people and cultures have different sensibilities. One tenant might view keeping their barbecue grill in the front yard all summer is a real convenience, and that tenant in the apartment's neighboring unit views it as an irritating eyesore that they have to look at every single day, okay? So today we're talking about the pros and cons of single-family versus multifamily apartment investing today, and your guest is me and me only, as I've owned both types of rentals for years, and I've bought both types, and I've sold both types too. And we're often going to be talking in generalities today, as there are often little exceptions to things, such that if I had to mention every last caveat, we would not learn much of anything today. By the end of the show, I'm actually going to make a decision. I'm going to choose what I think is the better investment, at least for me, in 2016. Single-family homes or multifamily. You're going to hear a lot of pros and cons of both, and you can decide for yourself. But first, I want to tell you about the best investment that I plan to make in 2016, and that is attending next month's Real Estate Guys Investor Summit at Sea. You can join the Real Estate Guys for 8 full days of fun, sun, powerful, practical investing intelligence, all aboard a luxurious cruise ship. And, it's really not just a conference, and it's not just a cruise either. The Summit at Sea, that's your opportunity to engage in quality interactions with fellow investors and some of the brightest minds in this entire business. So for 13 years, Enthusiastic investors like me and you from around the globe, they've all come together to network, mastermind, and study with each other and with thought leaders in economics, energy, real estate, precious metals, tax mitigation, estate planning, asset protection. Plus, on the cruise, you're going to meet Robert Kiyosaki, G. Edward Griffin, Tom Hopkins, your hosts, Robert Helms and Russell Gray, and a lot more thought leaders are going to be there. And, I guess sometimes people ask me, Keith, how do you have all these connections with these guests that you have on the show? Or how did I really get to where I am? I mean, there's really just no secret to this. I just don't know how much better I can say it. It's just because I go to events like this. A lot of the guests that I've had here on Get Rich Education are going to be on the Summit at Sea. And hey, if you've ever wanted to ask them any more questions, well, you're going to be around them for 8 days. As I want to make you more successful than me, faster than me, that's one of my mantras here. Well, you're already probably investing right alongside me if you act on the opportunities from this show and from our newsletter. At the Summit at Sea, you're also going to be networking right alongside me. It's going to be my first summit, and I'm not part of the faculty, so I'll be free to completely enjoy it just the same way that you are. It is next month, February 26th to March 5th. Our cruise ship sets off from Miami with stops in Cozumel, then Jamaica, then Grand Cayman, and finally the Bahamas before we return to Miami. So the networking, the education, the investment opportunities, and just the travel to those great places all at the same time. I mean, that's why I call this the best investment that I'll make all year. The Summit at Sea is not a low-cost event, okay? So if you're brand new to this, or if the only way you can get there is to go into 18% APR credit card debt to attend, well, then I probably don't want to see you there, okay? Now, Get Rich Education's right-hand man here, John Collins, he did attend his first Summit at Sea before he ever owned a rental property. So some people do that. Most don't, but you sure can. But, I mean, if you have even as few as 1 or 2 rental doors, up to hundreds of rental doors now, and you want to just accelerate your learning and your connectivity, I'm going to be on the cruise, and I'd love to meet you and get to know you there as well. It is the real estate investing event of the year. If you can't go on the cruise, you know what? I'm going to take tons of notes there, and then I'm going to come onto the show here and give you all of my top takeaways anyway, all right? So if you want to know more about the Summit at Sea, go to getricheducation.com and click on the events page. You'll also see on the events page that the next Panama Coffee Farm Tour is March 11th to 13th. Now, I often get asked a question like, okay, I'm interested in cash flow real estate investments, but what's better, single family rentals or multifamily apartment properties? Now, it's really hard to definitively answer that question. I'm just going to present some pros and some cons of each, and you can make your own decision, and then I'll tell you what I think is better right now. And, really the good news is they're both quite good investments as long as you're in the right market. And we talk about good markets here, as long as the numbers on the property work in that specific geographic market, and as long as you're educated in terms of your buying criteria and the risk level that you're taking on, well, then both types, apartments and single-family homes, can be great to add to your portfolio, okay? But if you're only trying to buy one property right now, which one should you go for? If you're buying your first rental property, which one should you start out with? All right, so here's a breakdown of some pros and cons of each to help you decide. I've kind of put this little check mark next to each one, okay? You need to decide what rental property you want to buy, all right? Now, when we talk about an apartment building, just visualize a 6-unit building, okay? I think everyone knows what a single-family home is. So as just with about anything in life, there are pros and cons to both. And I just kind of want to preface this by saying, we're assuming that these are properties that are a good deal, where the income exceed the expenses, meaning positive cash flow, and it fits your proper buying criteria with the proper team, and you have the proper experience in place to manage the property. Now, as long as all of that is intact, you have a choice between a single-family home and a 6-unit apartment building. This can help you figure out what to buy. So what about property cost? When it comes to property cost, the cost on a per unit basis, it's almost always going to be cheaper with an apartment. Now, the overall cost of the whole property is going to be more than it would be for a single family home. It's just the cost per unit's lower. Okay, so you're kind of getting more bang for your buck in terms of how many doors that you get when you buy an apartment building. How about the school district? Do you give that much thought? That is significantly more important to a single family home investor for you to look into the school district that property's in, because single family home renters often have families. When an apartment building of one bedroom units or efficiency units is what you're contemplating buying, the school district can mean significantly less, okay? It can mean almost nothing. Just think of the type of people that live there. They're typically not going to be families that live in a one-bedroom apartment unit or an efficiency apartment unit, okay? With financing, the interest rates on multifamily are significantly higher than they are with single-family, okay? And with single-family homes, they're both easier to find, and it's easier for you to fund those yourself. And to buy an apartment building, a lender often wants to see that you already have real estate investing experience first. Now, financing has changed recently such that you can more easily qualify for more than 10 single-family homes. Just a few years ago, it was difficult to purchase more than 10 homes with loans on them. In fact, on episode 56, you learned about options for qualifying for your 11th through 35th, yes, up to 35 single-family homes. That's huge. All right, just break this down. 35 single-family homes, if they each have $300 of monthly cash flow, that passive annual monthly cash flow to you adds up to $126,000. That's just if all of those properties of yours are single-family homes. Let's look at maintenance. Because of the shared walls, the shared yard, a shared fence, and whatever else inside the units apartments share, those maintenance expenses are often reduced because more similar amounts of labor and material can cover more units at once. So one example of this would be, let's just say roofing with maintenance, okay? Let's say one investor has 6 single-family homes and another investor has just one 6-unit apartment building. If that person with the 6 different single-family homes has to replace the roof on all the properties, that's 6 completely separate roofing jobs. Well, if the investor with the 6-unit apartment has to replace the roof, that will only be one roofing job. Although it's bigger, it's not going to cost 6 times as much. So that person ends up with essentially 6 roofing jobs done way cheaper than the person who has to pay for 6 separate roofing jobs with their single-family homes. And, I recently thought about this when I replaced the heating system in a 12-unit building of mine. It only cost me twice as much as it would have to replace that same system in a duplex, but yet I have 6 times the rental income in my 12-plex. So with maintenance, apartments give you those economies of scale efficiencies. Now, when it comes to paying for utilities, single-family homes clearly have the advantage, all right? Single-family home tenants typically pay for all of the utilities themselves. That's heat, electricity, water, wastewater, trash, and they typically even mow their own yard and remove the snow. What about management? All right, kind of using the same example on the 6-unit property, okay? It's either 6 single-family homes versus one 6-unit apartment. Well, you either have 6 properties to manage or 1 property to manage, okay? The 6-unit building is only 1 building and 1 address. So it would be easier to manage the 1 building or hire a property manager for the 1 building and shuffle all the paperwork than it would be to kind of scurry around to 6 separate buildings with 6 separate addresses. And that includes things like taxes, okay? For example, are you going to file taxes for 6 separate properties on your tax return or just for 1 property on your tax return? Okay, so the apartment has this kind of better ease of management. Let's look at the cash flow differences. Now, most often the returns on apartments show greater cash flow per invested dollar than with single-family homes. And it obviously depends on the location you're in, and it assumes that you're looking at good deals, but usually the returns will be higher on an apartment. That's historically, that's kind of changing as apartment building investing has become such a hot asset class that it's run those returns down because people are paying more for the same amount of income sometimes. So it really is a trade-off for some of the downsides to apartments to get that better apartment cash flow. And those returns can differ in reality from what is originally projected due to those downsides. But, the cash flow is often higher on apartments. Here in 2016, with those cap rates dropping, that cash flow advantage on apartment buildings just is not as great as it once was just a few years ago. Think about location now, the locations of single-family homes versus multifamily apartment buildings. Not always and not in absolutes. Again, of course, we're talking in generalities here with a lot of this. Single-family homes, they're going to be in more desirable locations than apartments. If you want a more extreme example, just think of what pops into your mind when you think of the word suburban versus what enters your mind when you think of the word urban, okay? Just kind of visualize that for a moment, all right? With suburban, think of subdivisions only containing single-family homes versus urban and areas of only apartments. Single-family homes are in better areas. Better areas mean better appreciation, better safety, higher quality tenants, and probably just fewer headaches and fewer stresses over the long term, okay? Single-family homes, they clearly beat out apartments on location. You're listening to Get Rich Education. We're comparing and contrasting investing in single-family homes versus multifamily apartments. I've got more comparisons when we come back. I'm your host, Keith Weinhold. Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers' friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
This is Rich Dad Advisor Tom Wheelwright. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. We're comparing and contrasting the differences between investing in single-family homes versus investing in multifamily apartment buildings. Let's talk some more about tenant quality. This one isn't any sort of guaranteed factor in either property type, okay, but there just is that better chance of having better quality tenants in a single-family home than an apartment. And, again, this is totally dependent on location and the quality of property, but single-family homes are going to attract those better long-term tenants. And think about what they're thinking about. They're looking for a home that's going to kind of feel like their own when they rent a single-family home. They want to make that their own versus apartments where very few people kind of see that as their own. Typically, a single-family home has that higher quality tenant looking for somewhere to view as their own and take care of. And, once they're kind of inside that and feel like that's the house they own, they're also going to take better care of it. If a tenant likes their single-family home and the terms work for you and they've been there a few years, that tenant might even offer to buy it from you at a good price. Now, if there's any chance that that tenant ever sees themselves offering you that, just think about how well they're going to take care of the place while they rent it. In apartments, they're never going to feel like they're going to be able to own that one unit in the 6-unit apartment building, okay? So apartments typically attract more transient tenants who likely will not stay as long, and they're just a lot less interested in treating the property as if they own it. And tenant quality, I mean, that ends up going a long way when it comes to owning a rental property. Again, vacancies, repairs, and headaches, those things we want to avoid. And, this can dramatically affect the anticipated returns on a property. So it's possible to have perfectly good, high quality, long term tenants in apartments, but the chances are just quite a bit better with a single family home. And just the same way, it's possible to end up with horrible tenants in a single family home, of course. So, it's just all about weighing the risks and looking at probabilities of good tenants or bad tenants. Single family home residents win out on this one as well. Okay. So if your single family tenant bangs a hole in the living room wall, all right, that can come out of their security deposit. We know which party's responsible. Okay. But if a tenant bangs a hole in your apartment building's common hallway, well, how are you going to find out who did it? Or how is your manager going to find out who did it? Okay. So there's just less responsibility on common shared amenities in an apartment building, okay? Let's look at tenant turnover. I mean, that's a huge thing. I mean, we just mentioned that apartments attract more transient tenants rather than long-term ones. And turnover, that could be your biggest expense as a rental property owner, okay? I mean, when you've got turnover, think about just the lost income because there's no one in the property, repairs to the house in preparation for new tenants, tenant placement, maybe even legal fees if the turnover is due to an eviction. So, the best thing that can ever happen to you as a rental property owner, in a sense, is to find good quality tenants that are going to stay for a while. Long-term tenants are just absolute gold to an investor. Once you're replacing tenants every year, your expenses can jump up quite a bit. Same as with tenant quality. It's not a sure thing that single family homes are only going to bring in long-term tenants, but it just kind of falls onto your risk scale. Now let's look at appreciation in each unit type. A lot of people don't buy just on appreciation. They buy more on cash flow, but it's a significant component. And single family homes almost always appreciate better than apartments. Okay. Apartments are typically better for cash flow. Single family homes better for appreciation. But, let's look at what we can scale up quickly here, okay? Now, say your goal is that you want to acquire 15 rentals this year, 15 doors, okay? To achieve that goal, you'd have to find and buy 15 different houses if you want to do that with single-family homes. I mean, no matter how well connected you are, that's going to kind of take some work. So that single-family rental strategy, that becomes pretty transactional. I mean, for each unit you want to add to your portfolio, you'd have to buy one house where you could just buy a 15-unit apartment building in one fell swoop. All right, now with management, a professional property management company is usually going to charge you around 10% of the collected rent to manage a single family rental. Compare that with 8% or less for apartment buildings, and that could be as low as a 5% management fee as a percent of the gross rent for a big apartment complex because there are those management economies of scale. So multis have an advantage there. Multis don't have an advantage on, what's your exit strategy? When it's time for you to sell, apartment buildings are harder to sell. Compared with selling 40 apartment building units all under one roof, if you want to sell a similar portfolio of single family rentals, that's going to be more difficult for a couple reasons, okay? It takes a certain buyer to buy a portfolio of single family homes, which means the buyer pool is going to be smaller, and it's likely going to be more difficult to find financing for such a portfolio. Alternatively, if you'd have to sell off each property separately, that's really going to take you some time. Let's look at what the values are when you go sell and what's market dependent. I mean, the values of single family home rentals, they're driven by other residential comparable sales, okay? So the income of your single family home, that doesn't factor into the price that you're going to get for it when you sell it. So that means that the value of your portfolio is tied to the residential real estate market in general. That could be a good thing. That could be a bad thing. It's just something that you have less control over, okay? So it's difficult for you to influence the value of your single family home rentals because it's the market rather than that property's income that's going to dictate its value, okay? With apartments, you have more control yourself over that property's value, okay? Apartment real estate is just not as dependent on comparable sales as single family homes because they're typically valued as a multiple of income. So the higher the apartment income, the higher the value. Therefore, it's possible for you to pay fair market value, quote unquote, for a mismanaged property. And you can go ahead and make some repairs, some upgrades, add a carport, add a heating system that increases the profitability of the building because it's more efficient, and go ahead and get a better valuation for your building that way. And within a few years, you can increase the overall income. And with that, that increases the value of the property. I mean, frequently in a medium or larger apartment building, we're talking way larger than 6 units now, even like a $50 per month per unit increase in the operating income, that can increase the value of the building by several $100,000. That means you just have a lot more control over the value of your real estate. So, there's potentially a lot more upside with multifamily if you can really identify a good deal and strategically implement things to improve its profitability. Again, here in 2016, those opportunities are not as great because a lot of people have already exploited those opportunities. So you can just add so much additional value optimizing the performance of your property. So there's a lot greater upside if you can really spot a deal. And it is just getting gosh darn hard to find good apartment building deals right now, just about all across the United States. And a lot of apartment real estate investors have just kind of come to a freeze in their activity, and they've become really patient with their buying. And some of them have even changed their strategy to single family rentals for that very reason. I learned from one of the preeminent apartment investors in the United States today, Ken McElroy, who was also here with me on Get Rich Education episode 25, that Ken's apartment building buying has seized up to almost a complete freeze here because it's just getting so hard to find good deals. Now, let's think about exit strategy a little bit. I mean, we talk about beginning with the end in mind, and some newer investors just don't think about their exit as much as they should, okay? I mean, what are you ultimately planning to do with this rental property that you're buying, okay? I mean, you might not know exactly what you want to do with it for certain. I don't always, although I have a pretty good idea of what my options are going to be before I go in and buy a property. But what are you going to be able to do with that property should you need to do something or you have some kind of life emergency, okay? For instance, let's say you decide for whatever reason that you do need to sell a property. I mean, who are your available pool of buyers? Well, single-family homes totally win out on this one because you typically have more options for selling it. Because you can sell that single-family home to someone that's looking to buy it as a primary residence that they want to buy and live in, and they'll often pay more for it than an investor would because it only makes sense for an investor to buy it up to a certain level. So you can choose lease-to-own options to your current tenants and let them buy it from you as well if you have a single-family home. If you're trying to sell an apartment building, typically the only people that want to buy that are investors. Well, what do investors always want? Investors always want a deal, okay? So if you're trying to sell an apartment building, you're probably not going to get an investor to just pay top dollar for your property. You might, but the chances are just less, okay? So in terms of selling your property, you have more options with a single family home than you do an apartment, okay? Not only in terms of what you can sell it for, but who you can sell it to. You've got a larger pool of single family home buyers. All right, so let's get down to, kind of what the decision is, what's better. And, there are so many pros and cons to this either way. In my opinion, the cons for owning either just are not terribly bad, okay? I mean, one has perks over the other for a bunch of different criteria. And I think you just really want to think about the term trade-off. I mean, in any investment, there's always going to be trade-offs, okay? Apartments might give you better cash flow over time, but that cash flow only just makes up for the potential location and tenant risks and potential lack of appreciation and exit strategy that you have on the apartments. And then with single family homes, you get that higher quality of tenant, but you might take a hit to the cash flow. And one thing I can't say enough of is that none of the factors mentioned or the pros or the cons are guarantees with either. They're just kind of trends, okay? And there are always risks. So whatever type of property you decide to buy needs to be based on you, your comfort level. If you're kind of a skittish first-time buyer, you're sort of nervous about things and you want to limit your risk, probably you're going to be steered toward a single family home. But if risk doesn't scare you as much and you just want to max out your cash flow, go for an apartment building, okay? If you're buying more than one property, maybe even buy some of each. Have both of them to kind of spread out your risks and benefits. I'm going to say that right now in 2016 and almost surely in 2017 and maybe beyond, I'm going to let you know which one of the two classes I think the advantage goes to, single family homes or apartment buildings. And in my opinion, at this time, it goes to single family homes. Okay, there are just more advantages there right now. Institutional and hedge fund money is increasingly chasing single family homes as well. Okay, they've taken a leap ahead of apartments for a while here for a couple more reasons. Number one, you have, like I mentioned, the recent availability of financing for more than 10 single family properties. That's huge. And the other one is this fact that homeowners that lost their family home to foreclosure a few years ago, they don't want to downsize and live in a communal apartment, okay, because they want to maintain their standard of living and rent a single family home just like they were living in before they lost it. So that helps with single family homes demand. Single family homes win over multifamilies today. Of course, there are always deals for each type in every market, but I've picked a single winner today, and that is single family homes. If you want to enhance your wealth, go ahead and check out GetRichEducation.com, where you can find out about those events that I mentioned earlier in the show. Another thing you can do is visit our giving back page at GetRichEducation.com if you want to see what organizations we're making charitable donations to. We're helping out some charities. You can also listen to all of the GRE audio shows, and you can see photos of every guest that's ever appeared on the show. You can do that also at GetRichEducation.com. And your best resource so that you can have actionable opportunities where you can buy hand-selected turnkey real estate in investor advantage markets, including a lot of cash-flowing single-family homes. Subscribe to our free newsletter. That's the thing you really want to do. Yes, once again, at GetRichEducation.com. Our subscribers to our newsletter recently had actionable opportunities in both the Chicago and Indianapolis market, with more on the way, and they will be delivered right to your inbox. Thank you for joining me, and until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.